If you don't know how to read your infinite banking policy illustration, you're in the right place. This video is all about how to walk through all 20, maybe 30 pages of your policy illustration so you can understand what in the world you're looking at. If you're new to our channel, thanks for being here. My name's Jonah. I'm one of the banking bros here at the Cash Compound. And believe it or not, I've been practicing infinite banking for almost a decade. I'm 3 months away from 10 years. And in that time period, I've not only started my very own personal 10 infinite banking policies, but I've also helped personally about 5,000 people understand, implement, and read policy illustrations. So this video is a little bit of a walkthrough of just one of the companies that we like to utilize for the infinite banking concept. And you're going to learn how to read the policy illustration from a certified infinite banking practitioner. So let's jump right in to page 1. Now, you'll notice the name of the company up there and the name of the policy that we are going to walk through today. There are lots of different companies that you can use for infinite banking. In fact, here at our business, we help people with about 3 different infinite banking style companies. Now, you might also have a few different products at a lot of these other companies. Don't get hung up if your product is a little bit different than the one that we're going to walk through today. There are differences in products and specific designs that could help you accomplish your goals in the future. And depending on the infinite banking certified practitioner that you're working with, it might make a lot more sense to do a slightly different design or method or a slightly different company than the one that I'm going to walk through today. But the company that I'm going to walk through today in the policy illustration is one of the strongest guaranteed to work companies that infinite banking has to offer. Not only that, they really endorse and appreciate the infinite banking concept. And for that reason, a significant amount of infinite banking certified practitioners are going to teach and help people understand their policy utilizing this particular company. You can see it there in the blue box. You'll notice that this is about 23 pages, and we're going to go one at a time through each of the pages just so you can understand exactly what's happening inside your infinite banking policy. We're going to touch on all sorts of topics like what is the base to paid up additions split or ratio. We're going to talk about what happens when you get a dividend and what are the other options that you could select when you get a dividend. We're going to talk about some of the free lifetime abilities that you can also walk through inside your policy. We're going to talk about which options insurance companies offer that you want to stay away from and which options insurance companies offer that you absolutely want to have included on your policy. So I don't know if you're working with an infinite banking practitioner currently. If you are not, at the end of this video, I'll make sure that I've got my contact information in the description and you can reach out and book a call. Not only would I be more than happy to walk you through your current policy illustration, just in case you have questions or you learn that it might not be set up the way that you'd like it to be. But if you are in the means and you are in the place where you want to start an infinite banking policy, I'll be more than happy to walk you through that as well. So let's start right at the top of page number 2. Well, you'll notice here between the lines, there's a little bit of a summary on this particular page. So I prepared this policy for you, the YouTube subscriber. You can see that there. I've imagined a male 35-year-old, and this particular policy has a starting or initial death benefit at $916,000 and an annual premium at $25,000. Now, there's an ability to start premiums and policies with lower annual premiums or higher annual premiums. You can even start policies on monthly premiums, quarterly or semi-annual premiums, but for the sake of the video, it's a $25,000 annual premium. You'll also see that the premium in this policy is going to be paid for life. Now, on the sheet, it says paid to age 121 years old. According to most insurance carriers, 121 years old constitutes a full life. You'll also notice between the two lines, underlines our summary section there that the underwriting class on this particular policy is preferred and this person is non-tobacco. Let's jump right into the very first bold word and phrase, the description of policy. Now, I will let you know that the very first 10 pages of this policy illustration that we're going to go through all read exactly the same. You're going to have a bold word or phrase, and then you're going to have a paragraph describing that bold word or phrase. First 10 pages are like this. I won't read every single word, but I will highlight the things that you need to know and look for in your current existing policy illustration. So back to the description of your policy. It says Whole Life 121 is a participating whole life policy providing a guaranteed base policy death benefit and guaranteed cash value. Let's break down that first sentence, and I'll highlight a few things here so you can understand exactly what we're looking at. The first thing is Whole Life 121 is a participating whole life policy. That is really, really important. There are some companies out there that offer whole life policies that are not participating. What participating means is that your policy, you, the policy owner, will participate in the annual dividends that the insurance company sends out to its policyholders. So if anywhere on your policy document you're noticing that your policy is non or not participating, that is a sign that you do not have a properly structured infinite banking policy. It also says that this policy provides two things. The first is guaranteed base policy death benefits, and the second is guaranteed cash values. So we are not a sentence into this document, and the insurance company is already letting us know that cash value is guaranteed in this policy. Now we're going to have another section where we talk through all of the values and all of the numbers on exactly how much cash value is guaranteed. That's not for this section here, but I just wanted you to see it and point it out. At the very bottom of this paragraph, it does let you know that this illustration is not a policy contract. And that's very, very, very important. See, your policy contract is not 20 pages. Your policy contract is much longer, maybe 75 or 100 pages. And the policy contract is where the insurance company is going to let you know all of the ins and outs of every single detail of your policy. The policy contract is a much longer and a much more complicated or insurance jargon-filled read. The policy contract's going to let you know that all sorts of things, like if you pass away within 2 years and the cause of death is suicide, then your policy can be contestable. And hey, you've got a chronic illness rider on your policy. Well, what constitutes a chronic illness? And the policy contract's going to let you know all that. The policy illustration that we're walking you through today is going to give you the summary of exactly what's happening inside your policy, and most important, it's going to provide the values, the cash values that you're going to want to see and understand about infinite banking. So let's continue. This policy illustration talks about other things that you should know about the policy, and it lists two bold things. The first is your initial death benefit, and the second is your underwriting class. Let's talk about your initial death benefit. The reason I called this line item the starting death benefit a little bit earlier is because inside properly designed infinite banking policies, your death benefit does not stay still or stagnant. Your death benefit rises each and every time you make a premium payment. Your death benefit rises each and every time you get a dividend provided by the insurance company, which is why it's very important to have a participating policy. So this section is going to highlight exactly what your starting or initial death benefit is. In the case of our YouTube subscriber here, our 35-year-old male, this policy has a total death benefit starting at $916,796. As we use this policy for infinite banking, our death benefit will fluctuate. It'll go down when we take cash value loans. It will increase back up every time premiums are paid, dividends are given, or we choose to use our policy for the infinite banking concept. But we're going to have at least a baseline of a starting number at $916,000. It also highlights the underwriting class, which is what we talked about a little bit earlier, that this particular gentleman is starting starting with a preferred non-tobacco rating. The underwriting class is completely determined by the insurance company based on how you look on the inside. Whether or not you've got the back, the throat, the neck, the situation with the kidneys. The insurance company determines this, and they let you know that underwriting class. The underwriting class determines how much death benefit they're going to assign to you and your policy right out of the gate. Remember, in infinite banking, we're not going in picking the death benefit, saying, I want $1 million, and letting the insurance company fluctuate our price, our premium. Instead, we're flipping the script on the insurance company, and we're saying we'd like to pick the premium, and we're going to allow the insurance company to fluctuate the death benefit. That's what makes infinite banking really, really unique among lots of other things. The next section, or the next header that we want to talk about, are the guaranteed elements in your policy. There are two. The first is the contract premium, and the second listed here is the cash value. So I don't know about you, but we are still on the first page, and cash value has been mentioned 2 times, that it will be guaranteed inside your policy. So I don't know what other YouTube videos you're watching, what other people you're subscribed to, or the influences that are playing in your head. But just in case you thought that cash value was not guaranteed, you could look at the first page of an infinite banking, properly designed life insurance policy and see that it is. Another thing that's guaranteed in your policy is the contract premium. The contract premium is how much you've agreed to put into the policy each and every year. The premium is guaranteed, and here's what that means to you. It means that the insurance company cannot adjust the premium. You can adjust, you can lower, you can possibly increase. We'll talk about that in just a few pages, but the insurance company can't. And so what that means for you is that your premium inside of whole life insurance is level. There are lots of insurance policies out there where your premium is not, but inside of whole life insurance, it absolutely is. Next, let's take a look at some non-guaranteed elements. In this section, one of the things that they talk about being not guaranteed are dividends. You can see that as the first bold word inside this policy contract. Dividends are a return of premium based on the company's performance year by year. They're also based on the claims experience, the interest earnings, and the operating expenses. Dividends, how we like to describe them inside of any video that you're going to see us create on our channel, is that dividends are almost like a bonus that the insurance company is going to give you each and every year. Now, when you get your dividend, we are very particular about what you do with it. But you should know that in a company that is chosen for our agency or others, that for infinite banking, we do not choose any company that has not consistently given a dividend for over 100 years. If I'm not mistaken, this company that we're looking at in this video has a dividend track record, a history of 140 plus years on giving out their dividend. Let's keep moving to the top of page number 3. It talks a little bit about the indexed dividend crediting option rider. Now, this particular company loves to talk about this option, and the reason for it is because it's a relatively newer option for them. It's only been around, I believe, since 2000 or maybe even a little bit after 2000. Let me read you a few sentences of this option, and you'll discover why traditional infinite banking enthusiasts do not encourage this option and why we definitely do not encourage this option. It says the policy owner, that's you, can allocate a portion of the annual not guaranteed dividend to this option, which has the potential to increase or decrease the dividend, but it will be based on the performance of an external index. That index generally is the S&P 500, which has the ability to increase or decrease your dividend. Now, here's the reason that we don't assign any money to this option. And just so we can prove it here, it's in the first sentence here, just in case you wanted to see. All of our allocation is 0 to this option. And here's why. Sometimes the stock market's up, sometimes it's down. Sometimes it stays consistent, and we have no idea when it's going to be up, down, or stay the same. Because this insurance company has a 140 plus year track record of providing the dividends, we think that you should just take your dividend each and every year, as opposed to putting your dividend into this option and having the ability to earn more, but the potential to lose your dividend in its entirety. For those reasons, we here at the Cash Compound, anyone that we partner with at our partner agencies, and most of our clients choose not to opt into this option at all. And we encourage you, if your company that you're looking at, your policy illustration has an option like this, then you maybe want to reconsider opting in. Now, the option that we do elect on your policy when you get your dividend is paid up additions. So you can see that right here. The dividend option that is elected is paid up additions. Let me read this to you and you'll understand why. The dividends credited each year purchase an amount of paid up additional insurance. This dividend value increases the cash value each year and also earns a dividend similar to a smaller paid up policy. So this option, when you're rewarded this dividend and awarded this dividend each and every year, does three things for you. First, it purchases paid up, paid for, paid off additional insurance. I can translate that into saying your death benefit is going to increase because of this dividend option. Not only that, it will increase the cash value, not just once, not just now, but each and every year. It's listed right here in the document. And then it will earn you a bigger dividend as the years continue. So a lot of people want the options where they maybe take their dividend as a check in the mailbox to their house. We don't encourage that. If you do that, then your dividend is going to be one-time money. If you elect this option, not only will your family get more money after you're gone because your death benefit has just increased, but your cash value, the money for you, will increase each and every year. And therefore, you'll have more that you can use, not only now, but each and every year as you continue. Not only that, you'll get more of a dividend next year, which means more insurance for the family, more cash for you. We think this option is one of the best options in the game. All right, let's get to the optional riders and benefits section here. You've got two that are included with any policy that we are going to write here at the Cash Compound. And those are the terminal illness rider and the chronic illness rider. Now, I'm going to explain them to you, but let me highlight the sentence that lets you know why these riders are included on any policy that we're going to put together. Hopefully you can see that there. There's no charge for this benefit. They're free. Of course, we're going to offer you the policies with the free add-ons, right? If you've got to pay for the option, a lot of times we're going to ask you to request that. Hey, I know that there's this option. I really would like it. Can I pay for it? Sure. But if you're looking to do traditional infinite banking, we're not going to add any option to your policy that's going to require cost. We will give you, and of course, any option that the insurance company is going to provide for free. So chronic and terminal illness are on your policy completely free of charge. How they work is that if you're ever diagnosed with a terminal illness or a chronic illness, the insurance company does not wait for you to pass away. Instead, they accelerate the death benefit to you. A lot of times there's a scale, maybe 75% of it or 80% of it, but they're going to accelerate or push the death benefit to you early while you're still alive so you can use the funds in whatever way you see fit. Both of those options completely included inside an infinite banking policy. Let's go to the top of page 4 here. Okay, at the top of page 4, we're still in the optional section. And so this optional rider, the accelerator paid up additions rider, is added to your policy as well. Now, this rider is super, super important when it comes to infinite banking. In order to prove this to you, I'm going to scroll a few pages to a page where they give us an itemized breakdown of the policy, and then we're going to come back and talk about this section. So I've jumped down to page 16, where the insurance company highlights the itemized premiums and benefits. And because we have an annually paid policy here, we want to take a look at the annual premiums. What you'll notice is that you've got $10,000 assigned to something called base policy. You've also got $15,000 here assigned to something called the Accelerator Paid Up Additions Rider. You'll notice that there are no other charges, costs, fees tied in to a properly designed infinite banking policy. What you'll also notice is that most of the money, more than half of the money inside this policy design, is going to the Accelerator Paid Up Additions rider, not to the base policy, which purchases a lot of the whole life insurance. In fact, let me switch colors here. You'll notice that over $856,000 of our $916 comes from the base policy. The other death benefit that makes up your total does come from the paid up additions, but the paid up additions really drives your cash value in the first few years of your policy. This can get a little tricky for a lot of people. What you'll notice about this policy is that at these values, a $25,000 annual policy total, that we've split your policy to be a 40-60 split. 40% of your base premium, 60% to your paid up additions premium. There's a lot of noise out there that says, no, you should split policies with the higher paid up additions, 70% paid up additions, 80% paid up additions, 90% paid up additions. I'm here to let you know that if you split your policies any higher, a lot of times, not always, and with most companies, the insurance company will force you to add on some other costs into your policy, which can be avoided if you just split your policy to the maximum allowed by the insurance company. Now, there are certain scenarios where some of these additional costs, some of these additional riders, in order to increase the paid up additions into your policy, is well thought out. And the design, with help of your infinite banking certified practitioner, is exactly what you are looking for. For the average person who does not understand infinite banking in its entirety just yet, we tend to avoid any additional riders, any additional add-ons that will cost you money. In fact, what we like to do is walk you through and talk you through your policy illustration, your own walkthrough of what you want to do with your policy, and explain a few things to you so you can make your own determination about which policy, which design, which ratio will work for you. However, what you'll notice about all the things that I just said is that people like to tend to lean heavy inside the paid up additions. So as we jump back to the fourth page in this policy document, now I want to read through exactly what the paid up additions is going to offer inside your policy. It says, Accelerator Paid Up Additions Rider Premiums purchase paid up additional insurance, which carries guaranteed cash value, which will be represented in just a few pages, and it may earn a non-guaranteed dividend. Hold on a second. That sounds exactly like what your dividend is going to do each and every year, because we've assigned the dividend to more paid up additions. This is really important. When you pay your premiums, and your premiums include paid up additions, when you get your dividend and your dividend is assigned to paid up additions, your insurance increases first, your death benefit. Your cash value follows second, not just 1 year, but each year. And next year, your dividend will be higher. That's really important as soon as we get to some values and we can look at some numbers inside your policy. Okay, as we continue here, there are a few things that we could probably go through pretty fast. The next section is labeled column heading definitions. And because when we get to the values, the numbers inside a policy illustration, they are all listed in columns, this page, actually page and a half, is going to give us each and every column that you might run into inside your policy illustration. We won't go through all of these because it's pretty easy to understand that policy year is going to represent represent what year you're in your policy, and guaranteed cash value probably represents exactly what is guaranteed inside your policy as cash value. And because we're not assigning any of our money to things like the index, any of our dividend to things like the index inside of a whole life policy, you're just never going to see these columns, indexed related columns. We're not going to put any of our cash value or our dividend at risk to the market. So these page and a half, and inside your policy illustration, you're also going to have a page or 2 pages all about the definition of each exact column. Once we get through that, we get to something called general policy assumptions, which is going to have us talk about the taxation of life insurance. This is a big topic, so I want to read this in its entirety. In order to receive favorable tax treatment of distributions, and that does include your loans. If you continue to learn infinite banking, you will notice that we take a significant amount of loans out of this policy. But in order to have favorable tax treatment, including your loans, under the IRC, a life insurance policy must satisfy a 7-pay premium limitation during your first 7 policy years and subsequent 7 policy year periods after certain policy changes. Failure to satisfy this limitation, this test, classifies your policy as a modified endowment contract, and it causes your distributions, including your loans, to be taxable to the extent there's gain in your policy. In addition, there's a penalty of 10% of taxable income for distributions from such policies if you, the policy owner, are not age 59 and a half. With certain exceptions, in any case, a gain in the policy is taxable upon full surrender of the policy. What this means for you is that if you do not have someone that you are working with that is a certified infinite banking practitioner, it is very easy to design a policy where you are going to run into taxes and penalties because it was not designed appropriately. What we do here anytime that we design a policy is we make sure that your policy, as illustrated, passes the 7-pay premium test, which means that your policy will not be a mech. What that means for you is that you can have peace of mind as you move forward and you start to take out policy loans. You can have peace of mind as you move forward knowing that your policy was set up and designed the right way, and you can say goodbye to Uncle Sam. No more IRS, no more IRC. I can use this policy to the full extent of how I was taught, how Nelson Nash taught me in the book, Becoming Your Own Banker, and how I want to use the policy in order to benefit and grow my cash flow. Let's keep moving. Okay, the next section on this as a little bit of a cost comparison index, just so you can make sure that the cost of your policy compares to some of that of the other traditional policies offered. Now, this can be a little confusing, and I want to give you some word of caution just in case you actually are doing this. If you're working with an infinite banking certified practitioner and they're teaching you the infinite banking concept, you do not need to price shop your policy. Because, like I mentioned at the beginning, when you start with infinite banking, what you should be determining is the cost of your policy. Don't let the insurance company fluctuate your costs. Say, hey, I want to start a policy at a $25,000 premium. I want to start a policy at a $50,000 premium. I want to start a policy at a $100,000 premium, and I'd like to add an additional $20,000 or $30,000 or $40,000 one time as a one-time lump sum into the policy. Determine your cost up front, and there's no reason to price shop. Right? Let's keep moving. The next section talks all about the index dividend crediting option, which we highlighted earlier. So actually, in this particular policy illustration, we get to skip a few things. We have already determined that we are going to allocate 0 to the index dividend crediting option, which means any documents or information about this option we can kind of skip through. So we don't need to know the definitions of the option. I mentioned to you earlier that the index they were using was the S&P 500. We can keep moving. We don't really need to know the index dividend crediting option historical rates. This negative 38% there in 2028 or in 2008, excuse me, is one of the reasons why we're not using this option. We don't want to lose our dividend. We don't need to know what our dividend might assume to be if we use the option, because we're not going to use the option. And then we get to all of the values. Just as mentioned, this is what the policy illustration is good for. This is exactly what I want to walk you through inside your policy illustration. Now, this particular company likes to highlight how much cash value is generated from your base policy premium and how much cash value is generated from your paid up additions policy premium. And they've listed it in 2 columns. But in order to save you at home who's watching this video from getting your calculator out, what we're going to do is jump to the page of your policy illustration where they've combined those 2 values for us and have just listed a cash value number for us. When you log in online after you've started your infinite banking policy, what you're going to notice is that you've got a cash value, right? And that's what you want to take out to use for your infinite banking, to pay off your debts, to buy your car. So instead of having 2 policies where we need to do the math, let's combine them so you don't have to. What you'll notice is let's highlight your contract premium. So what you'll notice on this policy illustration is that for 10 years, we have your premium being $25,000. And after the 10th year, we actually are dropping your premium to $10,000. Now, here's where it gets a little unique. Inside of infinite banking policies, you determine your premium. I've mentioned this 3 times in the video. You determine your premium. So if you'd like to have $25,000 continue for a long time, you can. If you'd like to drop your premium to $10,000, $15,000 a little bit earlier, you can. But every time you purchase premium, every time you make a deposit of premium into your policy, pay premium into your policy, everything about your policy increases its efficiency and gets better. And so a lot of times after you understand a little bit more about the infinite banking concept, a lot of people like to pay that premium always. They always want to make sure they're paying the premium. And we think once you understand infinite banking, you probably will too. But it's important for the first timer to understand that they do have flexibility inside their premium. They can change things around. When you pay your premium, the first thing that it purchases inside of life insurance is the death benefit. The death benefit is what's bought first. We read that in 3 different sections. Insurance is purchased first. Insurance traditionally is paid out after you are gone to your remaining family, friends, church, or charity. But inside of infinite banking, we are going to utilize the cash value, the equity value of the death benefit in order to use it now. And so here's how this reads. When you make a premium deposit of $25,000, your death benefit immediately purchased is $916. If you were to pass away, that's what your family would get. But of that $916, $14,516 with this policy design is available for you to take out, spend, use immediately as a loan from the insurance company, meaning not taxed as income. You can do anything you like with that cash value, anything at all, but what we're going to encourage you to do with it is use the cash value to eliminate third-party debts or use the cash value to create more income and wealth in your life. Once you've used your cash value to be an infinite banker, an honest infinite banker, you should begin to repay your policy loan on any frequency you'd like because it is not required from the insurance company. That's what you should do. Not only that, what you'll notice is that each and every year as your policy continues, your cash values increase and grow each and every year. This is important. Even when your insurance premiums have been lowered by you, your cash value continues to grow. This is a humongous deal. If you're having trouble reading your cash values, let me erase everything and then highlight one particular year so you understand the concept here. What you need to do is take the cash value of one particular year and then subtract it from the cash value of the year prior. I'll do the math with you here on this one particular year. You've got a $249,000 cash value in the 11th year of your policy. And if you subtract the year prior to that at $234,000, what you'll get is a difference of $14,000. What that means as far as your infinite banking policy, especially when you put it into the idea of a cash-on-cash return, is that your premium was $10,000. Your cash value grew in that year alone by $14,000. If I'm not mistaken, that is a 140% cash on cash return. That's just what is guaranteed to you outside and inside your infinite banking policy. That is just what's guaranteed to you inside your infinite banking policy. You can do that math in any particular year that you'd like to as you move forward. I've highlighted just what's guaranteed to you inside this insurance policy, but don't forget 140 plus years of a dividend on top of what's guaranteed. The dividend being assigned to increase that insurance, increase your cash each and every year, and give you more of a dividend next year. Now, here's a part of your policy design that's very, very important to understand. In order to explain this to you, what I need to do is jump down to the very last year of your policy. And I want you to take a look at the cash value and the death benefit values that are listed on this illustration. I'll highlight them both here. What you should notice is that the death benefit and the cash value are the exact same figure on your policy. That is really, really important to you when we understand that your policy has features inside of it, options that we've selected that make sure that your death benefit continues to rise. I explained cash value to you a little bit earlier as the equity, the liquid equity of the death benefit that you can take out of the policy. And what that means is that if your death benefit continues to rise, your cash value must exponentially rise to catch the policy. The most important part of a policy illustration is understanding if your policy, one, can have liquid cash value accessed from it right away to be used, and two, if that policy is designed proportionately so your cash values always continue and always grow. Infinite banking in and of itself is one, making sure that you've got the right policy built and set up for you, and two, learning how to use that policy to grow your cash values, to grow your wealth, to grow your finances. That is all that we do here at the Cash Compound. What we do is first, teach people about the infinite banking concept, and second, help them get into and learn to use properly designed infinite banking style whole life insurance policies. Believe it or not, as far as our policy illustration goes, we are very, very close to reading the entire thing. What we've got next is our itemized premiums and benefits page that we've actually already touched on and talked about inside this policy. Again, you'll notice that the only costs of this policy go to our base policy premium and our accelerator paid up additions rider. There are absolutely no costs associated with anything else inside this policy. On the very next page of the policy, you'll notice that this highlights just the paid up additions rider inside the policy. I've attached the paid up additions rider onto this policy for the first 10 years, and then after, I do not have any paid up additions rider dollars coming out of your pocket. In real life, you can determine how you'd like to do that. When you get started with your policy, especially if you're working with us, we're going to talk to you through that and make sure that you've made the best decision for yourself, and you actually have fluctuation and the ability to adjust things during your policy's lifetime as well if you feel like you want to do something a little bit different after your policy has started. Not only that, we do have a supplemental illustration where the insurance company takes time to highlight exactly what the dividend might be each and every year of your policy. You'll notice that the dividend can get pretty lucrative as the years continue inside your policy. That's very, very important that you don't start to take that dividend in cash. There are and can be some tax implications if you do that in the later years of your policy where your dividend can get pretty big. If you assign your dividend to purchase paid-up additions, which is the way that we've instructed you to do it, your dividend will always produce cash for you. So you still get the money, but it'll produce more insurance, which guarantees you more cash each and every year. And then, of course, it'll provide you more of a dividend next year. After those 3 pages, we do have a summary page that highlights not only how much your premiums are, but also how much death benefit that was added to your policy by those premiums. So on this particular page, it's again an itemized premiums and benefits page. You'll notice that sort of breakdown, and your policy illustration at this particular company wraps up with just a summary. Hopefully that was helpful to you. If you've got some policy illustrations that are in your file cabinet or that are saved on your computer and you don't know how to read them. This again was just an example of one policy illustration from one particular insurance company. There are lots out there, even more insurance companies that we use, that policy illustrations do read ever so slightly different. But here at the Cash Compound, we personalize and specialize in reading these for you and to you. So if you've got a policy illustration that you are uncertain how to read or want a little bit of help, click the link in the description of this video. Reach out to us. We'll be more than happy to read your current policy illustration to you or help you get started with a brand new infinite banking policy that works just like explained in many of our videos and especially in this one. And not only that, we'll walk you through exactly the policy illustration so you can feel confident that your cash value is guaranteed, that you can have access to it, and that your policy is designed to grow and cash flow. Thanks so much for joining. If you haven't done so already, make sure you like the video, subscribe to our channel, and we'll see you next time. Happy banking. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer. We taught you how to be the bank.